Hi friends, I am Mani. I'm the blogger behind getmoneyrich.com. In this video, we will try to calculate intrinsic value of a stock in a very quick time, and we will use two resources, Yahoo Finance and Money Control. We will use Yahoo Finance and Money Control to calculate intrinsic value of Britannia Industries. So let's start. I have prepared a small template using which we will try to calculate the intrinsic value of Britannia Industries, and to do this we will have to first pick some numbers for this stock from Yahoo Finance. So the first number that we have to pick is net income. So let's go to Yahoo Finance. I have already opened it in my browser and search for Britannia Industries. You see, open the Britannia Industries page in Yahoo Finance. As soon as the page opens, you will see a financials tab here. Click the financials tab, click this tab, and once you click the tab, you will see three reports that will open: income statement, balance sheet, and cash flow. We have to go to cash flow. Click the cash flow report, and once you click the cash flow report, you will see in the first line itself, you will see net income. Copy this number, copy the net income, go back to your Excel and paste the data here. Next, you have to pick change in working capital. You will get this again in the same cash flow report. Just scroll down and you see here there is a change in working capital numbers. Pick these numbers here. Copy this, paste it here. The third thing that we have to pick is capex. Go back to this report, scroll down, and you will see a line item which is investment in property, plant and equipments. This is what is we call as capex in short. So copy these numbers. Just note that all these numbers are shown in negative, so make sure that you copy the negative values, negative sign with the number, paste this value here. And once, what we have done now is we have copied the three parameters for 5 years for Britannia Industries. So for 5 years we have these numbers for Britannia Industries. Now the next step is we have to calculate the free cash flow. What is the formula for free cash flow? Net income minus increase in working capital. Please note here it is an increase in working capital, and minus capex. What we have, the number that we have picked here is change in working capital. That change can be increase or decrease. So whenever there is a positive number, it means the working capital change has increased. It is an increase in working capital, and wherever the number is negative, it is a decrease in working capital. So let's apply this formula. Net income, first is net income minus increase in working capital minus capex. But you see the capex number is already in negative here. We have to reduce the capex number. So what we will do here, instead of putting negative, we will put it as positive. So this is it. This makes the formula. So what we are basically trying here is, out of the net income, we are adjusting for the increase in working capital. Means suppose a company has made 100 crore net income, so the increase in working capital, out of 100 crores, the company has set aside the provision for increase in working capital. The company has also kept aside the provision for capex. So now whatever is left with the company after adjusting for these two becomes the free cash flow. So this is what we are going to do here. So this is what is free cash flow. Just copy all these numbers. So once we have these free cash flow numbers, we have to calculate the growth rate. So to calculate the growth rate, what we have, we will use the CAGR formula. The CAGR formula says, let's use this. the final value, this is the final value divided by the initial value. The initial value is this, bracket close, to the power 1 divided by the number of years, from how many initial year to final year, how many years it has passed. It has passed 5 years, so 5 will come here, minus 1, enter. So it means that the free cash flow has grown from 2017 to 2020 at a rate of 9.19% per annum. So now we will assume that this free cash flow, which has grown at the rate of 9% in last 5 years, will continue to grow at the same rate for the next 5 years as well. So assuming this, let's copy the free cash flow number for year 2020, and then using this number and this growth rate, we will calculate the free cash flow for year 2021. So what will be the formula? This into 1 plus the growth rate. That's it. I will just lock this cell here in my formula so that I can copy paste for the other cells. So just copy and paste here, and you can see in year 2020 the number is this, which is growing at the rate of 9.19% for next 5 years. So what does these numbers show? These numbers show that Britannia Industries is going to produce free cash flows, these free cash flows for the next 5 years. But there is a very important question that comes. What happens after 5 years? Britannia Industries is not going to close down after the 5th year. So we have to, what happens to the free cash flow that the company produces after the 5th year? So how to calculate that? There is a formula. This is the formula you have to use. This formula, but before we use this formula, we need these two numbers. This is weighted average cost of capital. So just because we are doing a quick calculation, let's assume a safe number for weighted average cost of capital. Let's assume a 12%. And at what rate we are assuming the free cash flow to grow beyond the 5th year? Let's put it 5. Why 5? Because see, no matter how good is a company, as a retail investor, we cannot foresee that at what rate a company can grow beyond 5 years. Sometimes it is even difficult to forecast at what rate the company will grow in the next year. We are talking about 5 years hence. So I think, and even the experts say this, that it is better to be slightly defensive when you are estimating the free cash flow growth rate for a company beyond 5th year. So 5% here, and 12% weighted average cost of capital is a fair enough cost. So let's now use these two numbers to calculate the free cash flow of a company beyond 5th year. Means, and in financial jargon's term, we call it terminal value. So what we will do here, we will use a formula which says FCF of 5th year is this, divided by WACC is this, minus FCF growth beyond 5th year, so this. So let's use this formula, enter, and this is the number which is called terminal value. What is terminal value? Terminal value is nothing but all the free cash flows that the company is going to generate beyond the 5th year. So once we have these numbers, then we need to calculate the net present value, NPV, of all these future cash flows. Remember, all these cash flows are future cash flows. So how to calculate NPV? We will use a formula of Excel, NPV, which says rate is nothing but this WACC. You use WACC number for this rate. See, NPV formula. First is rate, so pick this WACC, comma, and then you have to pick all the numbers that we have calculated as future cash flows. The first number will be this, then comma, then this, comma, this, comma, this, comma, this, comma, and finally the terminal value. Close the brackets, press enter. So this is what we have, is the net present value. Now remember, because we have copied all the values from Yahoo Finance, Yahoo Finance mentions all these values in thousands, but in India we are more comfortable with crore, so I will convert this 1000 number into crore. How to do it? Multiply by 100 divided by 1 crore. So we will use this formula, this number into 1000 divided by 1 crore. So now what we have here is the net present value of all these future cash flows is 22,000 crores. Now this value will ultimately give us the intrinsic value. Let's see how. But before that, we have to bring two more numbers. First is the market cap of Britannia Industries. What is the market cap of Britannia Industries? For that, we will go to Money Control. I've already opened this website, Money Control. Search for Britannia Industries in Money Control. Britannia Industries. The page will open. Scroll down a little bit, and you will see the market cap of Britannia Industries here. So just copy this value from Money Control, go back to Excel and paste it here. Then we will also need a share price of Money Control. So you will get a share price here, 3499.2. Just copy this number, go back to Excel, paste it here. Why we have imported these two numbers? Because we want to first calculate the shares outstanding. The formula for share outstanding is market cap, this is market cap in crores, divided by number of shares, the share price in rupees. Enter. So what this number is, this is shares outstanding, means the number of shares that the company that is outstanding in the market for trading for Britannia Industries. So for Britannia Industries, 24.09 crores are outstanding in the market, which you, me and everybody can trade in the secondary market. So once we have this number, now we are ready to calculate intrinsic value. What is the formula? The formula will be net present value in crores. This is the net present value in crores divided by number of shares outstanding in crores. This value. Enter. So you see, this is the number that we have, is the intrinsic value of Britannia Industries that we have taken almost less than 10 minutes to calculate it. So how to know if this value is fair or not? So we have to compare this with the share price. The share price, the current share price is 3499 and the intrinsic value, the fair price, is 914. It means this share is overvalued. Why overvalued? Because we want to buy this share at 914, but currently it is trading at 3499. So almost 3.5 times. So that's why it is overvalued. So this is the process where you can judge the intrinsic value of a stock in a very, very quick time. Though intrinsic value calculation is a very specialized and a complex process. The way Warren Buffett calculates intrinsic value is probably much more difficult and complex than what we have seen now. So I have built an Excel sheet that has capability of estimating intrinsic value of stocks, and in this Excel sheet you need not input any data manually. It just fetches data for its stocks on its own, and it gives you this intrinsic value not only based on this method but also on several other methods it calculates, and then it has its own algorithm to predict overall intrinsic value based on different mathematical models. And if you like this video, do please give me a thumbs up by liking this video, and please do subscribe to my YouTube channel. It will boost my confidence, and I will try to write more good articles, and I will also post more videos for you for better understanding. So see you soon with another video. Keep watching. Thank you.